Okay, so I've been getting a lot of questions, what's going on in the market? If you've been reading like the headline news, I'll try to break it down a little bit simplistic, but the United States long-term outlook went from a triple A rating to a double A, which does affect your mortgage rates. Also, what's happening is the Bank of England raised short-term rates, but you're like, well, that's England. We're in the United States. Everything globally will affect our market, our interest rates, the stock market. Also, energy prices are starting to creep up, like gasoline, electric. All of this puts pressure on inflation. You keep hearing inflation. Well, inflation is the reason that the mortgage rates are up. So we're trying to get everything under control, meaning that's what the Fed's job is, right? So we also have ADP. ADP measures how many jobs are available, how many workers are unemployed. And all these reports, you follow the reports, you follow the data, not the forecasters who are like, oh, rates should be at 5% by the end of December of this year. Well, that didn't happen because the experts are kind of like the weathermen. Really, no one knows what's going to happen because data is constantly changing. Okay. So today we got the unemployment report. It came back, pretty good. The job growth wasn't as high as they thought. So that is helping the bond market stabilize, which is what mortgage rates are tied to. We are at the highs in mortgage rates since 9 months ago, which was October, November of 2022. But again, I keep saying, these forecasters saying where rates are going to go, they're like the weatherman. Nobody really knows where rates will go. What goes up comes down, but how long is it going to take? So another question I'm getting asked is, the rates have been kind of stuck at a certain percent. Let's say, for example, 7.25. What's happening is they're making the buyers pay like what's called a discount fee to get the rate. So while rates aren't going up because there's no pool of investors to buy higher mortgage rates, because guess what? You're going to refinance when they come down, right? So would you buy something that's going to not be good in a year or two? So that is all impacting mortgage rates, the fees, the cost of getting a loan. And it's not like it was 3 or 4 years ago. So there is some confusion. I just talked to a client. They were like, this didn't happen on my last purchase. It's not the same environment. We're in a definitely different environment post-COVID. So I just try and explain some of this to, people who don't understand and, hear all these technical things. But really, we're still not seeing housing prices come down. Even though rates are up, even though the cost of doing a mortgage is up, the reason is there's still not a lot of inventory. When there's no inventory, prices can't come down because there's not a lot of competition. It's still a great time to buy because rates will always come down. But when rates come down, I'm assuming, the home prices will go up. So if you're interested in buying, you should buy now and just understand that in the future, probably through the next 1 to 5 years, you'll get the opportunity to get into a lower payment. So if you have any questions, feel free to reach out to me and click on my YouTube channel for more information.